Hello and welcome to the Alex Does Money channel. So then, this is the part of a new series where, as you can see on screen, I'll be investing £5 a day into 3 different Trading 212 pies. For those of you new to investing or to Trading 212 as a platform and are wondering what an investment pie is, pies are a feature on Trading 212 that allow you to build a customised portfolio of securities and invest at regular intervals into it. They can hold up to 50 different stocks, ETFs and funds, and you can flexibly change what you're invested in, the weightings of those investments, and move investments in and out of each pie as much as you like. So they're a great way of getting started with investing and getting into the habit of investing regularly. You can start with as little as £1 and invest daily, weekly, fortnightly or monthly. It all depends on your own circumstances. For me, I've gone with £5 a day per pie so that I'll be dollar cost averaging into the market, meaning that I'll catch the highs and the lows of the stock market. Over this series, I'll be showing you 3 different pies, each with different levels of risk and volatility, and we'll be tracking how they perform over time, as well as breaking down the contents of each pie and my reasons for picking each investment. I'm recording this on a Saturday, so as you can see on screen, the markets are currently closed right now, and my first 2 days of £5 are sat waiting to be invested. Before I go any further, this video is only for entertainment purposes and is not financial advice. So then, here's pie 1, the Own the World pie. So for this pie, I wanted to keep it really simple as a great starting point that I can also use as a benchmark to compare my other, more complex pies against. So I've gone with an ETF that covers the global market. ETFs are exchange-traded funds that are essentially a collection of individual stocks that often track an index and are a very easy way of diversifying your investments. The ticker I've gone with is Invesco's FTSE All-World Accumulating ETF, so let's move over to the fact sheet to explore why. So here we have the fact sheet showing all the key information about the fund. The fund's objective, as Invesco say, is to achieve the total net return of the FTSE All-World Index, less the impact of fees, which we'll get onto in a sec. So about the index then, the All-World Index represents the performance of large and mid-cap companies in global developed and emerging market countries. Each security in the All-World Index is weighted by its market capitalisation, meaning that the larger companies have a heavier weighting within the fund, and there is no weighting bias to specific countries or sectors, and it's rebalanced on a semi-annual basis. So other information then on the fact sheet. The fund was launched in June 2023, so it's quite a recent fund compared to sort of the more established funds, but it does have quite a cheap ongoing charge of just 0.15% per year. This is a lot cheaper than other similar funds such as Vanguard's, which I think is 0.22%. This fund is the accumulating version, which means that any dividends earned from the stocks within the fund are reinvested automatically back into the fund rather than the fund paying out a dividend, meaning it's extremely simple. There's no hassle with having to reinvest dividends or anything like that. Moving on down then, you can see the performance of the fund since its inception. It was created actually at a really good time, caught the market at a really good place, so it's done around 44% gain from its inception, so around about 22% per year. Moving on further down then, you can see the allocation geographically for the fund. So this is, as much as it's an all-world fund, it's still very heavily weighted towards the US at around 63%. And then you've got a lot of smaller countries making up the rest of the fund, so Japan, the UK, etc. In terms of the sectors of the individual stocks within the ETF, you can see it's quite heavily weighted towards information technology, which will be a theme throughout this video. But it's also got quite heavy weighting towards financials, consumer discretionaries, and industrials. And then if you move further down, you can see the individual stocks. So it says the total holdings here are 2,389, showing how this fund diversifies very, very well and gets you loads and loads of stocks in just one simple ticker. But despite having those stocks, the top 2 stocks make up over 9% of the fund, which are Nvidia and Microsoft. And then you've got other big players in there as well, such as Apple, Amazon, Meta, who again we'll see a lot throughout this video. So there's the fact sheet, and that's the fund. And that's what makes up the first pie. On to pie 2 then, the Nasworld pie. This pie consists of 3 equally weighted tickers, 2 of which are ETFs and 1 is an actively managed fund. I'll explain the difference between them later in the video. The ETFs are the Invesco EQQQ Nasdaq 100 and the WisdomTree US Quality Dividend Growth Fund. The actively managed fund is the JP Morgan Global Growth and Income, and the ticker symbols for all of these investments in the video are above my head if you want to search for them at any point. Each ticker has its own role to play within the pie, and as this pie does produce income, I've made sure that the dividend reinvest feature is turned on so that any income gets automatically reinvested. And if you want to do that, you can head to the Overview tab of the pie, scroll down to Dividends, and make sure that Auto Reinvest is turned on. Starting with EQQQ then, this fund aims to provide the total net return performance of the Nasdaq 100 index less the impact of fees. The Nasdaq 100 index includes 100 of the largest US and international non-financial securities listed on the Nasdaq stock market and based on market capitalization. It's the same format as the All Worlds ETF that we covered earlier, just based on a different index. Key information then, so this fund's been around since 2002, so extremely mature, and the ongoing charge is slightly higher than the All World fund at 0.3%. As mentioned, this fund does distribute dividends quarterly at a yield of around about 0.33%. So very small dividend yield on this. The index performance, as you can see, it's quite a volatile ETF, as we'll get onto later when we compare the ETFs with each other. But a lot of gains since July 2015, as you can see there. So it's nearly gone up 450% since July 2015. Moving on down then to the sectors. So this is extremely heavily weighted towards the US at 96.4%. And sector allocation wise, so obviously it does not include any financials, which means that information technology makes up a huge percentage of this, which just adds to the volatility because obviously it's very sector dependent. So you've got IT in there, but you've also got communication services and consumer discretionary making up the bulk of this fund. Moving on down then to the top 10 holdings, so 102 holdings, the same sort of players as we've seen earlier, Nvidia being the highest in this fund, weighted at 10% of the fund, so it's extremely reliant on them performing well. Same with Microsoft and Apple at 9 and 7%. It's all very tied to the performance of those big sort of tech companies. Moving on then to the second ticker in the pie, DGRW. This fund seeks to track the price and yield performance before fees and expenses of the WisdomTree US Quality Dividend Growth Index, and this index focuses around dividend-paying large-cap companies with strong quality and growth characteristics, and companies that pay more dividends are more heavily weighted within this fund. The expense ratio for this fund is around 0.33%, and the dividend yield is around 1.2%, which is distributed quarterly. Moving down then, this is a US-based fund, with IT making up the bulk of the fund at 27%, and the top 10 holdings again paint a similar picture to the other funds we've seen today, just in a different order because of those weightings towards dividend payments and quality factors. So what I'd like to do now is show you the historical 5-year performance of each fund using Just ETF's great comparison tool. I've had to use the Vanguard version of the All World Fund as the Invesco fund was only incepted in 2023. As you can see, the Nasdaq fund has the best 5-year growth, but is also the most volatile, dipping below the other two tickers at multiple points. The dividend focus of DGRW means that it's more resilient in market downturn, but doesn't quite have the growth of the tech-heavy Nasdaq fund. On to the final fund in the Naswell pie, JGGI. This fund differs from an ETF because it's not tracking an index. Its holdings are actively selected by fund managers that are aiming to hit the following objective. An actively managed fund that aims to provide superior total returns and outperform the MSCI All Country World Index over the long term. The manager is focused on building a high conviction portfolio of typically 50 to 90 stocks, drawing on an investment process underpinned by fundamental research. Now, despite being actively managed, this fund only has a 0.3% annual ongoing charge and aims to provide a 4% dividend yield paid quarterly. Looking at the fact sheet then in the top right corner, you can see that this fund has outperformed its benchmark against which it's set, the green line being the benchmark and the blue line being the fund itself. And then moving on down to the sectors and regions, this fund's still technology heavy, but a lot more diverse than the Nasdaq fund. And again, similar to the All World funds, the regions follow a similar trend of the US making up around 68% of the fund, with the other regions making up the rest. Moving on to pie 3 then, the Chips and Houses pie. This pie differs from the others because instead of ETFs or managed funds, it's made up entirely of 6 individual stocks. I won't go into the details of the companies too much, but the pie consists of 40% stable monthly dividend paying stocks in Main Street Capital and Realty Income, which provides a solid base for the pie. And the other 60% consists of AMD, Broadcom, Nvidia and Palantir, AI and semiconductor market leaders have experienced huge recent growth in the AI boom. This pie offers the highest growth potential but also by far the most volatility, and is the least diverse of the three. Dollar cost averaging into this pie should help offset some of the volatility, as regardless of what the price is each day, £5 will be going into it. And that brings me to the end of this video. I've added links to all my pies in the description, and I'm looking forward to see how each pie performs, and will be providing regular updates, so please consider subscribing if you're interested in those updates. Thanks for watching.